The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Darrell Martin, and I'll be flying solo this morning. Tommy O'Brien's out. And let's check out where everything's at right now this morning with the Bull Bear Binary Option Hour. Let's give you your morning checklist. We got the S&P is up 6.5 points. We have the Russell up 5. Nasdaq's up 23, and the Dow's up 52. So some positive movement there on the indices. We got copper right now. Copper's pretty flat on the day with gold down 1.5%. Silver down over 1.5%. Natural gas down 3% on the day. Some massive moves on natural gas. Looking on over at oil, we have oil currently is up 1% on the up 0.5% on the day. We got corn is up 1%, up 5 points, almost 1.5, moving on up there. Soybeans pretty quiet. It's been a busy mover this week, but today up only a few ticks. We got the pound dollar up 10, the euro dollar up 28. Check out the euro pound. It is currently up 18 with the dollar CAD up or down 31. We got the dollar franc down 18, the US yen up 20, the pound yen up 42, the euro yen up 50. Aussie yen is currently up 10 with the pound currently, whatever the pound says, just the futures contract right there. All right. So let's see what all we can maybe find. We'll scroll through some markets, pull a few things up, see what pops up on the screen. And let me change my background here. So this one's a little bit harder to read. We'll just go into like a light gray. Apply that. Make it a little easier to see. Let's see if we can find any potential trades there on the board. All right, so scrolling on through. All right, let's try going over here to gold. See if we can get something this morning. So maybe put some trades here on the binaries and maybe even on the spreads. You know, just depends on what kind of setup we got. And we have a few things going on. To make sure that you do understand what we're talking about trading on when we talk about binaries, not talking about any binaries, we're talking about the Nadex binaries. And if you don't have a Nadex account, hop on over to TFNN.com and click right here on the right side of the page. You'll see a Nadex banner. Click on that Nadex banner, and then under trading, click on Demo Trading Account. Fill in your username, first name, last name, and a phone number and email address. Click Apply for Demo. They'll send you a password. You'll be able to log in right away and be able to follow along and learn what these binaries and spreads are about. They give you a demo account with $25,000 of funny money. And once you get that, then like I said, you can log into it, and it's a pretty simple process. So to log into a demo, you just click Demo, and then it'll fill demo in at the top for you, and then you just put in your username and your password. Also, if you fund a live account, you'll be able to go in and actually get that demo extended. Fund a live account with a minimum balance. You can put as much as you want to in there, but with a minimum balance of $100. And obviously, if you're going to trade live, you're probably going to want more than 100, even though you can place trades with that little. Anyway, but you can place trades with that little money, but you're probably going to want to put more in. But if you're just trying to get your demo extended to begin with, because you're just trying to get things down, it's pretty simple. Just fund an account with a minimum of $100 or more, and place at least one live trade or more, and then you can get your demo extended out. And it's just good to learn the buttons, learn how things work, get a trading system down, figure out how you're going to put the different pieces together. So there's a lot of ways to do things, and you want to, they're options. So they give you a lot of options. I call them options for, day traders, because there's so many different ways that you as a trader can take advantage of them. And it's really for those who are going to focus on them during a day. Now, that doesn't mean daytime. It could be the Euro session. It could be late at night. It could be on Sunday. So there's a lot of different times that they could be taking place. But the bottom line is you want to have a trading plan, put it together, but you don't have to go in and spend just an exorbitant amount of time day trading. A lot of people think that day trading means that you sit there for 8 hours. I put on 3 trades yesterday. I didn't spend 8 hours in front of my computer trying to figure it all out. Okay, you just need to have a trading plan, have some systems. Those systems don't have to take forever. If you want to really narrow it down, focus on the morning hours because that's when the market moves fast. But I teach a lot of systems out there to y'all that you can know and that you can use, take advantage of. That only take an hour, sometimes 10 minutes, 5 minutes for the trade to be placed. The expiration premium collection trades, those only happen in the last 15 minutes. So there's a lot of ways to do these. And to help you out, I have a scanner. You can hop over. You can check that out on the homepage of TFNN there. But you can try it out for free. But it's a Nadex spread and binary scanner. Okay, so we got both. And you can go in and you can choose whatever market it is that you want to trade. So if I go and I choose, if I'm looking at, gold or I'm looking at oil, I can click on, say, oil. And I can say I want to sell, and I want to sell an in-the-money contract. Then I only want one that's going to expire within the next, couple hours here. Then I go down, I narrow that down. Boom, it's going to show me exactly what may meet my requirements, if there's anything. So there may not be anything. If I go ahead and reset the filters to see, well, what was there? It's like, okay, well, there's a couple things, but not within, within 2 hours. Okay, so let's bring that down to 2 hours. There we go. Okay, so now I'm not going to see other contracts that go out beyond that. Let me get rid of $CAD over here, so it's a little confusing with that being highlighted. So now I only have contracts. I don't have the ones expiring at 2:30. Only the ones in the next 2 hours. Now what if I say I want to sell? Then all the buys disappear. Now what if I say I want in-the-money contracts? Now it's going to only show me the in-the-monies. Okay? And what if I say I want my max risk to be, I want to say $85. Okay? Then it's going to narrow that down. Now those are the 3 sell contracts I can do. So I narrowed it down. And the thing is, you won't end up doing like this whole process every time. Like that'll be like what you're trading. You'll be like, I want 2 hours, 1 hour or less. I want, I can even bring it down to just 1 hour. Okay? And, if I'm trading the system, maybe that's all the time I want. Maybe I need 2 hours on the system. So, but let's see here. Let's bring it down to 1 hour. Get that stinking message box out of my way. There we go. So there's 1 hour right there. And if I'm, I'm going to go ahead. Let me check. I might have a signal over here on gold. And I click that. Boom. Now I'm on gold. Okay? So now I have to reset the settings. And consistently, I'll be trading like in the monies with less than an hour, max $85 risk, or, whatever. And so that's all I got to do. And now I can just flip around real quick and I can find the ones I want. So, whereas if I had to manually do that each time, then, of course, that could end up taking, a lot of time to manually find that. But now, instead of, because here's your alternative, okay? Instead of going over here and clicking all over the place, so, like, okay, well, I want to trade commodities. And I want to trade binaries. And then I want to trade, oil. And, okay, I want the current hour's expirations. Now I got to look through everything. I got to do all the math in my head. I got to see what fits. Okay? So that's where the issues are going to come in. It's going to make it a lot more challenging to trade effectively. Oh, that's 10 to 12. I actually wanted the 11 o'clock. So let me click on that one. Okay, let me look at these. Okay, well, there's only one in the money that has less than $85 risk. Okay, it's that one. I could do it that fast because I've been doing this for years. Brand new, very difficult. So a lot of people take the scanner and they look at it and they're like, oh, that's an advanced tool. Once I get down the platform, I'll go to that. It's like, no. The whole reason it was made was to make it faster and easier. Because me, myself, as a trader, even as when I was learning this and even as I got it down, it took me too much time to go through and screen and filter all these different contracts to find the best contract. I mean, when I got a signal on my chart, I wanted to take it. I didn't want to spend the next 10 minutes looking for which contract I wanted. And, so I'm over here watching this and, really just not seeing that much at all on it. So whereas oil, I have a great potential short over here. We got 10 minutes. So 5:10, I got a reversal volume bar there going on. So quite a bit happening. And let's see, we can just throw on, let me throw on my expected volume. On this chart, got some stuff on my other charts, but just to make it where we can all see it together. All right. So we'll grab that. Give it just a second to load. See what kind of setup we have here. Here, let's actually just move this up here. We'll shrink that down. So look at this declining volume on this up move. So, if I'm reading volume on that, I got to go back and go, hey, do I have any kind of resistance level way up here? So back here, we broke through this level. This is a sort of an older magnet support resistance level at this point. We're coming back down off of it. Okay, so we got that right there. Let's check it out, dig a little bit deeper now. Okay, so that's our trade. We've got a short trade. We have declining volume after a run up this morning. We got a spike striker on it. We put all the pieces together. I go, okay, well, I want to check out what's available in oil, see if I like any of the contracts that I see. So we go to binary scanner. We go to oil. Choose live over here. And that would be the main contract, 96.21. $96.12. That's actually not bad. You get that for $31. So we can go in. We can short that contract. Put that one on. So again, that's selling the 96.21. Place the order there. It gets filled. Okay. And market's moving on us a little bit. Already starting to take off. We need to adjust our order quickly and amend to get in. Okay. So we're in the contract. Now we got to set up a take profit plan. So what is our take profit plan? Okay, well, the first thing I do whenever I set a take profit plan is I'm going to go in and I'm going to actually expand out the binary contract size. And let's see what else we can do. All right, so I want to go down here and I want to get rid of all my filters.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back. So let's check out where things are at right now. And so we got this oil trade on. We're looking at it as a potential trade. Or not potential trade. We actually have the trade in. And we went in. We looked at going short the 96.21, basically a slightly in the money binary contract. And the biggest key I want you to focus on at the moment is actually on the where to take profit and learning this step. And that really involves one important thing, and that is looking at and paying attention to, because you got to have your stop on already, but looking at, as far as where do I know where to take profit at on the contract, if it moves down, if it moves in my favor. Well, you're going to see that by looking at a binary price ladder, okay? So right over here, we're going to look at this and we're going to go, okay, well, what is the binary price ladder? Well, a binary price ladder is basically all the prices listed for a binary contract. And you're going to look at the bid and the offer spread. And one thing I want you to notice is when you run out of bids, because your bid-offer spread basically makes it where there is no bid because it's down at zero, then that is where your volume disappears. Okay, so see like where there's $6 right there? You got like 21 contracts. It's actually pretty high for that level. We go over here. Yeah, they haven't actually sucked it all out yet. Usually they do. Let's go to something like this. Maybe they're just putting it all in there today. All right, 200 contracts. So there's maybe a little better example for you. But like 200 contracts right there, and then we go down one more level, and there's like 10 contracts. Okay? So that's more what I'm talking about. You want to be able to look at that, and you want to be able to see that the size, so let me put them up side by side for you. Okay, right here and right there. 200 contracts versus, 10, 20, 30 contracts, whatever it is that they're listing at the moment. And that actually looks like a secondary market maker. That's not the primary market maker. But when there's no bid offer, a lot of times you won't see any kind of volume on either side. Obviously, you'll see nothing on the bid side because if the bid offer is about $5 or $6, $4, well, they're not going to go in and let you buy it from them at zero. That'd be awesome if I could buy at zero. I'd buy those all day. They're not going to let you do it. So I went in and I put my take profit there at like $10. Anyways, but let's see why I did that. What was my logic? Well, we have about $4 wide here at the end, but they're usually a little bit wider on the intradays. So let's look at the intradays. Intradays, we're seeing about $6 wide. Okay. Notice there's a 575 here with no bid. This one does have one. It looks like the market makers are competing a little bit. So, but that's actually 2 out of the 3 market makers are listing on that right now. And let's go here. Let's see what we got. Same thing. We actually have there's some markets going on. So the market makers are competing a little bit, so that's making the bid offer actually got really tight there for a second. It was like $1 or $2. You gotta love that. But there's 2 market makers when you have a consistent size, like all the way down the chain. Okay? But knowing that the bid offer is somewhere between $4 and $6, I'm going to go on the heavier side. I'm going to go on the $6 side just because I don't want to risk trying to push it. Okay? And I want to make sure I get out. Now, a lot of times I'm doing a lot more than 10 contracts, or more than 1 contract. So it's really important to me because if it drops down to 5 or something, then I can't even get out of the trade. On my entire position without having to wait for them to refill it. I can get out, but it's like they'll have to refill. I'll take out say there's 5 listed, they'll take the 5. It'll come back, I'll take it again. They'll come back, I'll take it again. And it can be a very painful process. Sometimes it doesn't always work out so well, and it can really go against you. Okay? So if it's $6 wide, and we're just going to go ahead and assume 6, even though it could be less. I mean, right now I see 3, I see 4, I see 6. So I'm just going to go with 6. Then 6 by 0 would be no bid. Okay? Therefore, I want to raise it a little bit above that. Let's go a couple bucks above it, so that it'll be like a 2 by 6. Okay, or 2 by 8 actually, because $6. So if you're not quite following what I'm saying the difference between the bid and the offer. Okay? And on some of these contracts, depending upon just which one I'm looking at, it may be $3, maybe $4, maybe as wide as $6. So I usually go with the wider of the group there. And so if the difference between the bid and the offer is $6, then I want there to be a bid and an offer on both sides. There won't be a bid at 0 and an offer at 6. So there'll be no bid and there'll be an offer at 6. That means the liquidity drops down from like 40 to 20 or 40 to 5 or 40 to 1. Okay? On the buyback side. So because I want to buy it back, I sold it higher, I want to buy it back lower. So I'll add a couple bucks to that, and that's helped me come up with my price. So we'll walk through this a little bit more, make sure you get this. It's one of the most important aspects when you're trying to maximize those profits. We'll be back right after this.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, going back here to the Bull Bear Binary Option Hour. And we're looking at this oil trade now. We sold at 27. We got a buyback to take profit at $10 on the trade. Really, you could have put it in as tight as 8. Basically, look at that. What I was saying is take that bid and ask spread, okay? So we were basically looked at it and we were like, okay, the bid ask spread is about $8. So $8 right there, or $6. This is a bid ask spread. We add $2 to it. So that's to be safe, because basically we want to get out of the trade before we maximize that bid ask spread getting to 0. Because remember, if we lose the bid, then what's going to happen on the trade? If we lose the bid on the trade, the volume, the liquidity is going to go way down. So I want to get out before the bid offer spread goes away, before I don't see both, before I no longer see both quotes. If I get out before then the liquidity is still there. Therefore, I look at what the bid offer spread is, I add a couple bucks to it, and that's my exit price. So, like I said, you could have chose 8. I chose 10. Whatever, give or take a couple dollars there. The big thing is just be out before the bid-offer spread goes away, especially if you're trading size. If you're trading 1 or 2, you're probably not even going to notice this. And it's one of the important reasons to bring it up is as a small trader, when you start to get bigger, you don't know about these things. As you start to add on to your size, because you're just doing singles, and it's like, well, 5 is enough for you, right? If there's 5 contracts quoting, you can get out of your trade. No big deal. But when there's, when you're doing 10, 20, 30, 40, 50 contracts, then you're really going to start noticing on that trade. So pretty simple. There's not a lot to it. It's not a hard concept, but it's one that if you don't know, it can really come back and bite you. And you'll wonder what happened. Why can't I get out? Are they trying, is the market maker trying to screw me? And da-da-da-da-da-da, all these things that come up. It's like, well, no, they can't lay off the trade, okay? Understand a market maker is trying to make bid-offer spread. That is their goal as a trader, to make the bid-offer spread. And if they make the bid-offer spread, that means that they bought from you at, say, 14, and they sold to somebody else at 21 or whatever. Okay, so they will basically, they bought from you like right here. This bid-offer spread, 17 by 19 right now. So, or 15 by 17. It's moving on down, which is good for our position. But basically, if you went and said, hey, I'll sell at 16.75, they're buying from you at 16.75. You said, I'll buy at 17.50. They're selling to you at 17.50. So they're making the difference between those two prices right there. Well, if they just take one side, if they just go in and say, okay, well, you want to, buy it, 5, I'll sell it to you at 5. Well, they can make $5 if it goes down, but they could lose 95 if it goes up. Okay, they have no way to lay off the bid offer. They can't lay it off on the other side. They can't go, okay, well, I'll sell it to you at 5 and sell it to and buy it back from somebody else at 0. Because nobody's gonna, that's not how it works. Okay, nobody wants to sell at 0, right? Because if they're gonna buy it from somebody on the sell side, nobody wants to sell at 0 because they can't make anything on the trade. And so since they can't make anything on the trade, they can't lay off the risk. If they can't lay off the risk, they're going to drop the size down dramatically from like 10, 20, 50, 100 contracts to maybe 1 or 2 or 3 or 4 or 5 contracts on the trade there. Okay? So that's why the bid-offer spread goes away. They have no ability to lay off risk. And when you understand the dynamics of how a market maker works, there we go. Just took our profits, so that's not too shabby. Just locked in, $175 there in the last 15 minutes. Anyway, so I hope some of y'all were able to take advantage of that. And if you understand why a market maker exists, that they exist to make a market, their motivation to make a market is to make the bid-offer spread. And if there is no possibility for there to be a bid-offer spread, then how can they make money? All right? It's nice that they're even making a market at all on the other side of the trade. Okay? And then knowing that, hey, if I was that market maker, what would I be doing? Well, I'd want to make sure that I was able to get rid of my risk, to hedge off my risk. I'm trying to make bid-offer spread, not trade directly as a market maker. That's what you'd be thinking if you're a market maker. If you can't get rid of it, then you're either going to not make a quote, but they're contractually obligated to make a quote, even if it's only 1 contract or 5 contracts, or you're going to make a very small quote. So since they have to make a quote, they're going to make one, but they're going to drop the size down. And when you get that, you're like, oh, that's why the size goes down when there's no bid or no offer, because they can't lay off their risk. And they can't make money on bid-offer spread when there is no bid or there is no offer. So they know that nobody is going to sell at 0, and you actually aren't even allowed to. Like if I go in here and I try to put in an order to sell at 0, like it won't let me. It'll give me an error. See, we cannot accept an order level of 0. Okay? You can't sell at 0, buy at 100. So not only could somebody not do that, but they're not even allowed to do that. Nobody would want to do that, and they're not allowed to do it. So it's not there. By the way, that's why we take profits. Look how that thing's popping on back up. But yeah, so we took our profit right there. We went in, we went short. We had declining volume. We bring the chart back up over here. And volume spiked up a little bit right here. Look at that, right in that little last down move, and then it turned right back around on us. So talk about timing the trade right there. Worked out very well. Yeah, it's moving on up. We'd actually be stopped out of the trade right now. So that was a perfect play, taking that profit when we did. It's good to know where that's at. Let me teach you something else, something I've learned, okay? Going along with, where do I take profits? So sort of lesson number 2 here on taking profits. So one, we know we want to take a profit before that bid-offer spread disappears. But another lesson is I look at, a lot of times I don't go for the best possible exit I can get. I'm not trying to squeeze every penny, every dollar out of every trade. Because we've all been there. You would have been there just now if you didn't follow the plan that I laid out, where it goes down and you're like, okay, I'm going to go for the 6, or I'm going to if I get $6.25 or 7 or 8 or whatever, okay? And then it goes down, you don't get it, boom, it pops back in the other direction. I mean, this is literally a perfect example of, why we take profits when we do. But the second lesson I wanted to give you with this was, a lot of times I'll look at, what's maybe the second worst, second best, second worst, I don't know whatever way you want to put it. But basically, on the next level, I mean, that's, oh, man, I'm so glad we took profits. What is when I look at these price levels, I'll go, what am I getting for waiting on that extra $1 or $2 or whatever that I'm trying to make? Okay? And sometimes I've realized when I'm looking down at the price ladder over here that, like right here, here's 4, here's like 11. Okay? Not 12 or whatever. It was 10 a bit ago. But I'll look at it and I'll go, sometimes you can just tell by looking, and you may have to scroll down and look at some other contracts. And I scroll all the way up and down the price ladder to look at them to see how the market's moving on that specific instrument. Because it's different, by the way, on every instrument. Okay? Some instruments have $10 wide bid-ask spreads. Some dollars have $1 wide bid-ask spreads. And when I'm looking at these, I'm going, for giving up a few dollars, I can get out of the trade like 10 or 20 or 50 ticks earlier. Okay? As an example, let's say I were to sell this 650 contract. Well, I could take profit at $12, okay? So I can sell for 33, and I'm not doing this trade, by the way. I'm going over the what if with you, okay? The last trade we did live, this one we're not doing live. But look at this. This one's 50 ticks away at 97.50 for $4. So if I'm willing to give up $8 of my profit, yes, that's a decent amount, but that's 50 ticks, 50 cents of movement, which isn't a massive move on oil in and of itself, but that's still a big move. If I'm willing to give that 50 cents, I can still go in and lock in. I mean, this is selling at 38 right now. I could make $26 on that trade. So when I say 26, I mean that could be 260, it could be 2,600. Okay? So when you hear 26, don't write it off because you think it's small. You can always do 10, 50, 100, whatever, what kind of liquidity is available in that market. So in this market specifically, I mean, we got contracts of, 200, 220 deep. So that could be 40, 26, that would be $5,200. Okay? So it doesn't necessarily mean it's a small profit. But you go in there, you sell that, I could buy back 50 cents sooner on movement just because I'm looking at the price ladder and I'm taking it into account. Now, something else I can do is how far do I think it's going to move? Okay? Well, when I'm looking over at this contract right here, this is where we had the volume spike right here. So my expectation is that it would actually come back to the low of this volume spike that we had. And so I'd go, okay, well, what's the low of that contract? By the way, I'd expect the market probably to reverse again here in a second. But 96, 95, 94, or what is it? Let me see. Let me make sure I get it right. 96. Okay. So if I go down here and I go on the sell side, I can use the simulator, and this can help you. And type in 96. And let's see what it tells us the contract will be worth. Any specific contract that we decide to trade. And let's see here. It popped up really far. We had the 96.21. Right now it's saying that it would be worth not near as much. Sort of surprised it's that far away. But we're so high up, and we just ran straight up on that lift. But could we get back down to 96.21 in the next 15 minutes? Potentially, yeah. If we did, what does it say that the price would be at? Right there, $96. It's saying that we would... Let me reset that. And then let's just put it on about a 34 cent. That's pretty much we're right at that 0.35 cents. There we go. Okay. Basically it's showing that sold 25, you can make 25. It's basically saying you'd have maximum profit on the trade. This one says that the price, if it got down to 96, would be right at $50, which is accurate, right? Because we know that if a strike gets to a price, it'll be right at $50. So by using the simulator, we can also just type in 96 on here. But by using the simulator, it'll tell me, what basically the close price would be 0. Well, I know it won't really be 0 because there's going to be a bid offer. But it does give me an idea on what the price will be, what it'll be worth. We're getting up there to almost up to 96.41, 42. We're pushing right now on the 0.7 deviation level. We got to wait on something to tell me to go short. So, I definitely would like to go short on this trade, but I'm not going to do it yet. But anyway, so that's some other trades going on in the background. But let's see here. And so looking at all these, trying to decide what we might do on it. All right, one of those is closed out already. We'll grab the other one here in a second. And let's see what we have on this trade. But what I want you to look at is I want you to pay attention and just see, can I give up some of my profit? Okay? Again, can I give up some of my profit in order to take profit a lot sooner? And that's really the question I have. Can I give up some of my profit to take profit a lot sooner? And if I can, then it may be very, very wise for me to do so. We just got a massive move, by the way, in the yen there. So, fired off a trade. But if I could take profit a little bit sooner, like 50 ticks sooner, and only give up a few bucks, it's worth it. If I can take profit on looking at that bid offer spread and going, you know what, I get out at 10 a whole lot easier than I can get out at 5 or 6 or 7 or 8, then that could actually be a really solid trade. And trying to see what else we got, but yeah, that was a fast move. That thing flew down. Look at that right there. Trying to look over, pulling up the US yen here. We'll see. I want to go over that with you. It just went pretty fast. What do we got those. Let me see what else we have. By 74. All right. I'll check that out when we get back. We'll dive into that trade. So stay right there. We'll be back right after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
All right, folks, come back here to the Diagnostic Trading Hour. And so check out US Yen. It just dropped on down there, got a nice short move down, and signaled by an MVP, and also just a rapid, obviously, increase in volume, but staying strong on that decline in volume right there. So that was a really fast move that just came into play. And try to see if we got anything that might be able to help us on this, but with only a few minutes left, it's going to be hard to do much with it. And so I'm trying to figure out if there's maybe a way that we can take advantage of this, but I'm not sure if we're going to find one. I mean, this is definitely a high-end breakout trade right here. Looking up US Yen, seeing what we got on it. It's in the last few minutes before 11 o'clock. And that pretty much burnt through every single contract. We're just right at that edge. Be able to bring in some. I think it just flipped back around, but it's dropping down and just sucking the premium right out of it. So doubt we're going to get anything on that one that I can call fast enough on the show for you. And what about for 12 o'clock? Is there anything there? We burn through those. Burn it through pretty fast. So moving on down right now to the half deviation level. And what do we got over here? Yeah, the deviation levels. Let's add on the deviation to see where we're at on the day on deviations. Well, we're there. See what pops up. And bringing it up 1 minute. Take it just a second here, but we'll be back to analyze some more trades here as I come back on the diagnostic trading hour for you from 1 to 2 o'clock today. There you go. So moving right down to the half deviation mark, we're actually sitting right at, if I'm right on that, yeah, we're sitting right at a 1 deviation level on the U.S. yen. So again, we are sitting right at the 1 deviation level on the U.S. yen at the moment. And so I would expect it to stop at this moment. We're also seeing volume is starting to decline. It's dropping down right now. So unless we get further increase in volume to really push us through that, I think we're going to literally just pause right here. And it looks like last night we went up a little bit before we headed on back down. But from high to low, days range, we're at a deviation move at the moment. So I wouldn't go short. I wouldn't go long additional on this trade. I'd actually just stand aside and see how the market plays out at the moment. Waiting to see if we get a spike strike or something of that sort. But this definitely isn't going to be a spike striker right here. I'm just trying to see if there's anything I can read in this for you so we can maybe find the trade. But I don't think we're going to have time on the air. The show is going to come to an end. So we'll have to see if we can find some other trades here a little bit later in the afternoon. All right. Well, with that being said, let's see where our markets are at right now. Obviously, we got a little bit of movement there. And all the indices were positive. They've all turned negative. Everything has turned around. So we got all the markets moving now in the other direction. And like I said, we got that oil trade took off. Looks like Ukrainian forces are now engaging Russia on Ukraine soil. That would probably have a lot to do with what's happening right now with all the markets dropping. All right. Make sure you say your prayers for all the people out there. And I'll see you here in just a few hours.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.